Hello everyone and welcome back to our weekly educational videos. Thanks for attending this webinar and to start trading with OneRoyal. So, a quick disclaimer, the information provided in this webinar is for educational purposes. Please do not take them as a financial advice. Do your own research before start trading. The topic of today is continuation patterns made easy. So last time we have seen the reversal patterns. Today we are going to discuss what are the continuation patterns, the 5 best known continuation patterns, entry points for those patterns, and how to set our price target profits. And finally, we will go to MT4 to show you real examples. So what are continuation patterns? Continuation patterns are hints for traders that a price trend will likely to continue. In the middle of a trend, these patterns indicate that the trend will continue after the trend. So continuation pattern, simply it indicates that the market will continue after it. So if the market is going to the upside, making higher highs, higher lows, and then suddenly you saw a falling wedge in this shape like this. This falling wedge in an uptrend indicates that after it we will see a continuation of this trend. So we will see a move to the upside in the same direction of the main trend. Once we have a breakout, the market will continue to the upside. This applies even for a downtrend. Okay, sorry. This applies even for a downtrend. Let's say the market is moving to the downside now. Okay, so the main direction is to the downside. And then in the middle of this downtrend, we saw a rising wedge, something like this. This indicates that after it, so when we have a breakout out of this rising wedge, when we have a breakout here, most probably it will continue in the same direction of the main trend, so to the downside, lower highs and lower lows. Okay, so this is what are the continuation patterns. They occur mid-trend and interrupt the price activity for different lengths of time. Patterns like this can signal that the trend will continue after it has finished. So if we look to the right as well, we have an example here. When the market is moving to the upside, entered into a bullish flag. This is called as a bullish flag. After the breakout, the market continued to the upside. So once you see this pattern, you have an idea that most probably the market will continue after it. It will continue to the upside in the same direction of the main trend. This is the main direction. As soon as the pattern has been drawn and then breakouts of that pattern, and then the breakouts of that, but the pattern is deemed to be complete and the price is now ready to move in the trend preceding the pattern or in the same direction of the main trend. The best known continuation patterns, we have here 6. These are for, the first 3 are for the uptrends. So if you see them in an uptrend, expect a move in the same direction of the main trend. If you see a bullish flag like this is a bullish flag here in the middle of the uptrend, this one I'm talking, after it or at the breakout, you should expect a move in the same direction of the main trend, which is to the upside. And if you see a bullish pennant, you should expect the same. Instead of bullish flag here or bullish falling wedge, also you should expect a move to the upside. So either you see bullish flag, bullish pennant, or bullish falling wedge, then expect that the market, after breaking this pattern, there will be a move in the same direction of the main trend. These three applies in a downtrend. So if you see a bearish flag inside of a downtrend, expect after the breakout to see a move to the downside in the same direction of the main trend. Similarly, if we're talking about a bearish pennant pattern, instead of seeing bearish flag, if you see a bearish pennant similar like this, expect a move in the same direction of the main trend after the breakout, and for sure a bearish rising wedge. So generally, continuation patterns are powerful in indicating a pause in a trend. So this pattern shows a pause or consolidation before continuing in the same direction of the main trend. For traders, the most powerful continuation patterns are those that provide a higher risk to reward ratio and are the ones mentioned and to be discussed below. Okay, these patterns shows or provide you with a higher risk to reward ratio, since you can put a tight stop loss and a far target profit. So if the entry here, you can put the stop loss above this and a target profit which has the same length of the preceding wave. We'll talk about this in the coming PowerPoint. So where do you enter the market using those patterns? We have again those 6 patterns to the right. You can see where is the ultimate entry for those patterns. For every chart pattern, there is an optimal entry point that provides the best risk to reward ratio after waiting for a price action confirmation. Okay, last time we have seen that better to wait for a price action confirmation. Usually wait for a breakout and then a retracement until this breakout. This is the best scenario if you would like. Or if you see a breakout, you can directly enter here based on a buy market order. So there are 2 ways, as we have seen last time. Either you will use the buy market order, directly you enter after the breakout, or you will wait until the market move little bit to the upside, and then you will wait for another retracement to this level, which is the breakout level. So you will wait for a retracement after the breakout, and then you buy here based on a buy limit order, using limit orders. So, okay, so better to use the price action confirmation because using the direct breakout strategy will end up with more fake breakouts. Okay, so you will end up, if you trade directly after the breakout, most of the time it will do something like this and then re-enter inside this triangle. The best place to enter a bullish falling wedge, the first pattern, okay, which is this one here, is entry after break above the bearish short-term trend line. So if you see a breakout here and then a move little bit above it, then consider an entry above this trend line. This is the trend line, okay, or the higher end of this bearish trend line. Let me make it clear for you. So the best entry is after the breakout of this trend line. If we're talking about this here, falling wedge, the better is to trade above the bearish trend line. A stop will be below the lower end of this wedge. Similarly, if we're talking about the pennant, you put your stop loss below the lower end of this wedge or the pennant, entry above the breakout, or once we have a breakout above the bearish trend line. For the case of a rectangle, you can enter right at the higher end of this rectangle after the breakout of this rectangle. So similar to, so here you can wait for a close above this higher end of this rectangle. Wait, if you trade based on the 1 hour time frame, wait until you see a 1 hour bar above this rectangle or the higher end of this rectangle. However, for me, I would like to see several bars above it and then wait for a correction, and I will put a buy limit around this area here. So this is the confirmation method. But if you would like, or you are an aggressive trader, you can enter based on one bar once we have a close above the higher end of this rectangle. So similarly, you apply this, but in the opposite side. So the stop, if you are using the rising wedge for your short idea, we have here a downtrend, and you see a continuation patterns with the form of a rising wedge. You will put the stop at the higher end of this wedge, entry below the bullish trend line once we have a breakout here. For the bearish rectangle, you do the same as we did for the bullish, but in the opposite side, stop at the higher end and the entry at the lower end after a breakout here. For the bearish pattern, you know now, stop above the higher end of this bearish pennant and below, once we see here a breakout, you will enter. Now we have seen where you put the entry, where you enter, where do you put your stop loss. It's time to see how do you plot your target profit. Easy way to use the target profits here is based on the length of, let's say, the highest wave of this falling wedge. So let me read it for you. Following a breakout from a continuation pattern in the same direction as the preceding trend, the price typically hits a predetermined objective with a high probability. In most continuation patterns, the target object is equal to the width of the pattern itself, such as the height of the rectangle or the longest section of the wedge. So if we're talking about the falling wedge, the best target profit to be used here is by taking the width of the highest or the longest section of this wedge, which is this one. This is the longest one. This is the shortest one, obviously. So you will take the longest one and then you will drag it at the entry price. So you should expect the same length of this here wave. Okay, so by dragging it to the entry price, you know where most probably the market could go to the upside. This is the target profit here. You can do the same for the bullish or the bearish rectangle. You will take, since we have a rectangle, so all the waves are equal, you will use one of them and then you will drag it to the entry price, and then you will have an idea. So this is the entry price here, and then this is the target profit using the equal patterns of this length and by dragging it to here. Stop loss around here. For the bullish pennant and the bearish pennant, we will have a different strategy here. We will use the preceding wave. Okay, we will take the wave before the market enters inside this pattern and then drag it to the entry price. Okay, and then you will end up knowing where most probably the market could reach. Similarly, this applies to the bearish pennant. Okay, you will take the length of the preceding wave. We have a bearish impulsive wave here, and you will drag it to the entry price, and then you have an idea where the target profit will be. Now let's move to a trade example using a continuation pattern. So in the following chart, price is moving in an uptrend. Okay, it's clear. We have now, you know, now that we have an uptrend, higher highs, higher lows. So we are in an uptrend, obviously, and the market in the middle of this uptrend posted a wedge, a continuation wedge, or a bullish wedge. It's more like a pennant, if you would like. Okay, so now you know that once you see this pattern, most probably after the breakout, there will be a move in the same direction of the main trend. So this is the main direction of the trend. After it, you should expect a move to the upside after the breakout. This is how you should analyze or use the continuation pattern. So we have a breakout, and then you can see the market move all the way up. Let me give you an example on MT4 to make this thing clear. Here we have the Euro JPY. Euro JPY was in a clear uptrend, higher high and higher low. And if we look at this area here, the market posted a bullish flag. This is called the bullish flag. Okay, once we have a breakout around this area here, the market continued all the way up. A way to know where to put your target profit is using the preceding wave. So I will use the ABCD. And since you enter around this area here, you can see that the market, once it reach our target profit, just moves to the downside. Okay, so I use the ABCD pattern, or the same length of the preceding wave, drag it to the entry price. Now I should expect that the market will end up around this zone here, which it did, and then tumble. Okay, so entry price around this area, entry, target profit around this, already attained, stop loss below, let's say below the lower end of this bullish flag. Another example I will give you, which is let me remove the drawings. We have this here, the rising wedge. The market was in a clear downward movement, lower highs, lower lows. Once you see such a pattern, now you know that after it, you might see a move to the downside in the same direction of the main trend. So the main direction is to the downside. If we have a breakout after this pattern, if you are here, you should expect a move to the downside. And this is what happened. You can buy at the breakout here. You have a breakout here. You can buy around here. Stop loss above the higher end of this wedge. Target profit, you will take the preceding wave before entering inside this. Let me take this before entering this wedge, and then you will use the entry price, which is around here, like this. The market moved to the downside, however, it didn't reach, let's say, the point that we use as a target profit. You know, the market is not perfect, but almost it was reached, this target profit here, and then the market moved to the upside. So yeah, this is it for today's session. This is it for today. Thanks for attending, and see you next week for a new market update and a weekly educational video. Trade safely, and bye-bye.